Hey, this is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain. We here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, hey, you talking to the Prophet? Hey, hey. We talking condos and nice clothes and driving Lambos. I remember them night codes, we couldn't stand those. We tried to drive on them high roads, but had to stay low. Now there's solutions to hard bills we couldn't pay for. I talked to Prophet to get some profit, we couldn't change the top. If it's a stock and I need a cop it, I wait for him to drop it. Ain't no option, let's get it poppin'. We chillin' in the trap. I need some crypto, put it in my pocket by any means I rock. This is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain, we here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet.
It's all fake news.
Hey.
It's phony stuff.
Hey, you talking to the Prophet. Hey, hey, you talking to the Prophet.
Okay, we have microphone. We have music queued up. Ron's not doing anything on his driveway. It's a pretty good day. So far, so good. Let me say hello to a few people. Where shall we start? Let's see. That was yesterday when Grandma was piecing out. We got Biotech Breakout, Gordon Bennett, McNabb, The Real J. Cole, Baykeeper, V. Reload. Ryuhito, CC Brown, Antonio, what up? Over here, we've got a few people. Todd, first in the gate. Jim, what up, Jim? Brady in the house. Brady, bam. Ryan, Candace. I'm just going to put your little blurb. So this is what we'll do. If you're on the YouTubes or if you're on YouTube, Twitter, Twitch, and I can see your comment. I don't know if it shows the Facebook ones, but if I can see it, I'll put it up there in the morning. So if you have something you want to say to the world, to the 15 of us that give a crap about crypto, then you can put it here. Let's at least try to get 25 likes today because we're doing 25 cognitive bias. I can't have 25 in the title and not have at least 25 likes. I don't mind if I get 25 dislikes, but I need 25 something. Let's see. Biotech Breakout. Crypto's definitely cognition. Yes, we do have our biases. Antonio in the house. Tiffany. Jerry V. Hall. Bam. Who will be doing a live show tomorrow, I believe. So everybody catch Jerry tomorrow. If you guys have a shout out. Bam. And Ella Paul. I think I said Ella Paul, but there you go. Again, anyway. Demayan. Darting uphill. Sebastian. Patsy again. Scott. What up, Scott? Attack helicopters. Huh, that's us. What is your what is it? Sexual orientation? And now you can say anything. So I say attack helicopter. And they're like, what? I'm like, whoa. Are you being intolerant of my chosen orientation? They're like, no. You want to be an attack helicopter. What's my gender? Jedi. He's a Jedi or ninja. Probably Jedi. Okay. Okay. So, oh man, it did a little skip thing. Hold on. Hold one. Wait one. Okay, we got Scott. We got Sylvia. Dave and Ashley, what's going on? I get that a lot. What's up? Nick. Captain Cardano. El Capitan. I had to part ways with someone in the community because they tried to get me into a car wreck with a bunch of idiot, devs on some project that no one's ever going to look at. Techlon, what's going on? Scorpion, what up? Brady, Joe. I'm going to get some of you, no doubt I'll get you more than once. Starting uphill, Patrick, what's up? Joe Fernandez, ¿qué onda? Okay, that's pretty much it. All right, so we will be right back from our non-commercial break. Some pieces of news. Rudolph Giuliani can no longer practice law in New York. There's a surprise. I guess being a pedophile is not enough, but when you're a perv and a pedophile, oh, and also you break the law every chance you get, maybe they take your law license. How about that? So good for Rudolph Scamiani. Nesh, good morning. Okay, so we'll be right back. We're going to talk cognitive bias pretty much. It's going to be a lesson on cognitive bias. We'll do a quick look at the markets, and then we will dive into it. And you'll have some material to go back to kind of dig into over the next few days. So get your books, get your pens, get your, oh my God, there's so many. If it says spam on the thing, like no one's going to answer that. If your name on your phone is spam, shush, I don't know, man. All right, we'll be right back. Boop. Okay, so let's take a look at markets real quick. Let's take a quick look. Please, if you can, while we're getting started, throw a like up there. We need to get, for the love of Pete and all things unholy, for the love of Satan and all that we worship in the darkness. Come on, man. We need 20, at least 25 likes. I don't ever ask for likes. I don't want your money. I want your affection. I'm an affection whore. I'm not the other kind of whore, that's for sure. COVID put the brakes on that. I never got to be a whore. Hoop and Tony, what's up? That's a weird conversation, isn't it? They're like, what in the hell are they talking about? Okay, we are going to get into the 25 cognitive bias in cryptocurrency trading. Guess what? They're the same 25 cognitive biases in real life. They're these things that get in the way of correct thinking. And so we're going to talk real quick. We will go into all that in just a second. Let's look really quickly at what we got going over here. So Bitcoin trading for 18 million Americans as NYDIG partners with the internet banking firms. Which firms, say you? I don't know, man. South Korea Giants token rallies 50% following Binance partnership news. Whoopty. So anything that partners with Binance is likely to get rug pulled. Be careful. Be careful. Binance equals rug pull. If you don't know that by now, you will be on the receiving end of getting all your stuff vacuumed up. What's going on the Vortex scores? Well, let's just take us a little look-see. Oh, did I do it? Man, I did this. No, I did it right. Never mind. Whew. The Bitcoin, just real quick, Bitcoin 34.4, Ethereum's over 2,000. Binance, who cares about Binance coin? Cardano's kicking some butt today. It's up. They did a partnership with Orion, or at least there is a partnership they're announcing with Orion. So whatever that means, I guess that's cool. Yeah, great. The NYDIG news to me is probably the most important. What's going on the Vortex scoreboard? You'll notice if you look down at the bottom, I started putting the Vortex scores with the prices of the assets. So you'll see the price, you'll see the percentage, and then out to the side, you'll see the Vortex score. For those of you that follow Vortex, for those of you that don't want to pay the $100 a month, for those of you that just are really neurotic like I am, there you go. Vortex is the winner. Acropolis right now is a 90. So technically, based on the way we look at it, it's a buy signal. If you want to go with the time. So think about it like this. If you're a time-based person, you would buy, when it hits 90, you would buy the asset, the small portion, because this is just strictly trading. You would buy a small portion of the asset, and then you would hold it for 1 week. That's a time-based strategy. No matter what, after 168 hours or 25%, you are out. Your name's Bennett. You ain't in it. Hit the sticks. Sell it. keep the profit in the token. So you get the free token. You're shooting for anywhere between 25 or better %. And they are likely to do it. This is the gift that keeps on giving. Very few of these don't at least make 25%. And this is how I accumulate these little weird tokens. Sometimes I have a whole portfolio full of weird ass tokens. This has been one of the ways I've accumulated through these little bumps. Anyway, something to think about. You also have a score-based practice where the score-based, let's say I bought Acropolis. I don't even know what it is. I would want to research it first. Don't buy anything you don't know. Take some time. But you decided to buy it. It's got a 90 Vortex score. Great. You buy it. And you wait until the score ducks below 65, and then you sell it. Cool. I prefer time-based because it's easy, right? It's easy. You just remind yourself. You say, hey, Siri, set an alarm for blah, blah, blah. It's doing it. Stop. Stop. Anyway, yeah. So there we go. So you have your time-based strategy, 168 hours, which is for all of those of you math inclined, divide by 24, you get 7 days. Cool. And for those of you, 7 days, right? And then you have a score-based strategy. So you pick a score. So if it's a 90, when it hits 65, you sell. Great. Anything else interesting? Coty is interesting. It's in the range. Yeah, there you go. Let's see. There's nothing else that's super exciting. That I really would tell you about. Price change, Bitcoin Cash, Bcash, whatever you want to call it, it's up 40%. It's at $23. Let me tell you this. I sold my Bitcoin Cash for about $1,500. I had a few. I did good off that. That's back when I had like, how many did I get? I don't know how many I got. That was in the Bitcoin days. Anyway, I sold it. And this was in 2017. And I just turned it into Bitcoin. I was like, nope, I'm not playing this. I'm not playing your reindeer games. What else is interesting? Unusual Twitter volume, also Bitcoin Cash. Unusual trading volume, also Bitcoin Cash. So it's a little pumpy. It's a little pumpy, as was Live Peer, a little pumpy. What else is pumpy? Rally. It's trading weird, but it's not really being crushed on the tweets. So who knows? Whatever. Okay. Let's just take a big look at prices. As you guys know, things look pretty good. Let me see over here. Okay. I just made Voyager my client this week. Oh, that's awesome. Good one. Luis, good to see you. Surf Tech, good to see you. And anyone that I missed. Dubai Money, also good to see you. You're not too late. We haven't done nothing yet. Joe Pirate, Mark, Belinda, JR80, Catalyst. It's like saying Catalyst, but if you have a lisp. Techlon, good. Okay, let's look at prices really quickly. Michael Murphy on the other side of the water. Good to see you. Or I guess it's like there's like a person on one side and a person on the other side. How do you get to the other side? You're like, you're on the other side. You're like, all right. The Bitcoin, 34,370, it's up about 2%. Ethereum's up, it's over 2,000. But Bitcoin is outpacing by a fraction. Ethereum was outpacing yesterday. The Cardano's up about 9%, so it's kind of crushing today. That's probably on news of a partnership. And they're about to do Cardano 360 next week. So they'll announce some cool stuff. My guess is Polkadot, it's up just a fraction, but it's up. It's over 16. Matic is up about 2.5%. What are some of the other big winners? VeChain's at 8 cents. Whoopty smoke. Nothing looks super exciting right now. Cardano's kind of the big winner. Render is doing okay. It's 46 cents. The more I look into Render, the more I like it. I added more yesterday. I'm going to wait. I'm going to see if we get a pullback or whatever. But really, I'm going to probably continue to add Render under $1. I'm going to dollar cost average into it. So don't go balls deep. Just slowly add to your position. Don't do anything that you'll look back with a fond amount of regret, which a lot of people have. AGI. Oh, I'm going to probably add. I'm going to add there. Yeah, same thing. I'm going to add there. I'm going to add fetch. I'm going to add render. Near looks cheap. Near looks real cheap. It hasn't really come back. It hasn't bounced back. What about 1 inch? 272. Yeah, I like my 1 inch. Anyway, it's today. Wow. Well, okay. Cardano 360 is today, so I guess we should get into it. Video Tuber, good to see you. Wood HK and Andy Panda. Hello to everyone. If you're on the YouTube, please throw us a little like on there. I don't monetize the channel. I don't want anything but your affection. I am a hound for affection. Okay, let's do some cognitive bias work. What is a good screen? I wish I had a good background screen for cognitive bias other than, I guess, just prices. You say, well, cognitive bias, what? Well, let's first talk about critical thinking. Get your pens out. Get your pens out. Okay. And again, none of this stuff is gospel. This is all stuff you can figure out. But I'm going to put this under my opinions.
Yeah, well, that's just like your opinion, man.
Okay, let's talk. Critical thinking skills that we all need. Analysis, communication, open-mindedness, problem-solving, creativity. Most of us have a handful of those. A handful, but not all. And that's the problem. So you kind of need all these. There will not be, the pop quiz is if you guys make money in your life or if you give it all back to people like me that are on the other side of bad trading behavior. Okay, so analysis, communication. Communication is the one I'm not great at, but analysis I'm good at. Open-mindedness. There's always an area where you're good or, you could improve. Analysis, communication, open-mindedness, problem-solving, and creativity. All right? You need them all. This is what makes a good critical thinker. And then you can look at the world and go, what a dumpster fire this is. I'm going to behave differently. So let me have a cool thing. Let's talk about game theory first, then cognitive bias. Game theory, the study of mathematical models, you could also say psychological models, of the strategic interaction between rational decision makers. It has applications in all fields of social science as well as logic and computer science. And just because the world is behaving irrationally and a bunch of idiots are kind of steering the ship, it doesn't mean that you have to behave irrationally. You need to reduce the noise to at least a way where you can deal with it. You can kind of make some sense of it, right? You can't be irrational and then look through an irrational lens at other irrational players and come up with any kind of path forward. So you have to at least control your domain, narrow down the noise in your field of view. And so this is game theory. It's a study of the mathematical models, and I would say and psychological models of strategic interaction between rational decision makers. It has applications in all fields of social science, as well as in logic and computer science. That pushes us into the economic side of game theory. Economic key points. 1, focus on the long run in all groups. This you should put on your refrigerator so that you can see it over and over and over. It's pretty important. 1, focus on the long run and all groups involved, right? Not just the person right in front, not just the person picking up the free check, but everything that it touches and the ways it interacts, all the particle interactions. Okay. 2, economics can be subjected to vested interests. Okay. Embedded interests, hidden agendas, what have you. 3, long run effects are more complicated than short run effects. Well, that makes sense. It's easy to hit an 8 ball. Like you have the white ball and you hit the 8 ball, or you hit any ball, and that interaction makes sense to you. Everything after that starts to get dicey because it might not be perfectly 90 degrees or 45. It might derivate a little bit and hit another ball in a weird way that you didn't see. And so when you're making all these assumptions, every time you make these secondary and tertiary assumptions that revolve around your first assumption, whatever degree of margin the first assumption is off, all of them are going to be amplified and misdirected. So it gets very difficult. So again, number 3, long run effects are more complicated than short run effects in economics. Okay. Assumptions in game theory. In economics, there's the assumption of, this is lately has been a little weird, but there is the assumption of rationality and maximalization. We're seeing maximalization in the greater markets. We're not always seeing rationality. And it's just the reality is the lower, it's the lower IQ of the aggregate investor. It just is. When you democratize these markets, which is a good thing, and you give people free money, they're going to gamble because humans gamble. They're going to punt, and eventually veterans are going to hoover up all that winning. They're going to hoover up all the stimulus. It turns out that a lot of these low IQ investors, and I don't mean they have low IQs as humans. I mean, they have low investment IQ. They don't understand macroeconomics and things like that. They don't know the gears that turn the economy, or even how, currency is created, or even they don't know what the fuck a bank account is. So the reality is the investment IQ is incredibly low, probably the lowest point it's been in history right now. And so what that does is it creates an environment where there's lots of maximalization, the hunt for maximalization. There's not a lot of rationality. You assume that a player in a game is rational and will strive to maintain or maximize their payoffs in the game. Irrational players approach maximalization in different ways, and most of them look like gambling, and most of them are gambling. And if you give people money that they didn't earn, they didn't trade some of their hours for or their intellect for, if you just give them a check, of course they're going to gamble it away. Why would they not? Okay, hey, you're going to give me $1,300, $1,400, cool, gamble. Oh, dang, I came up short. Well, it didn't matter. I didn't have it anyway. You're going to give me 17 months of rent I don't have to pay back? Cool. Doesn't matter. That's the reality. That's the world that we live in. So, yeah. Let me see. Let me make sure I haven't missed anything on the comments. Most of the chromosomes efficiency in communication. Yeah, I know. It is what it is. Frank, good to see you. Oh, yes. Pop quiz, hot shot. What do you do? Yeah. Oh, wait. Let me harken back to that. You
want answers. I want the truth. You can't handle the truth.
Okay. So I have queued up here all the 25 cognitive bias. You say, well, okay. So let me go. And let's just determine what. Bang, bang. Okay. Cognitive bias. The tendencies to think in certain ways that lead us to systematic deviations from a standard of rationality or sound judgment. Why do we make the decisions that we make? And this goes along the path of be curious, not judgmental. When you see people make flawed decisions, it's a lack of education, or they are being overpowered by their emotion, the emotions that drive them. So the less, especially in investments, I mean, really, it sounds bad, but in life, you want to have as little emotion when you're making decisions as possible. Emotion clouds judgment. Now, we're emotional creatures, most of us. So you have to factor that in, but you don't want emotion to be a part of any decision-making process, because emotions are lies. It's coping mechanisms that your body lays on top of the world in order to let you process what you see, right? To justify and rationalize your behavior and the behavior of others. But what I would urge you to do is not only kind of get your own emotions in check, but also when you're watching behavior around you, understand through the lens that other people are, many, especially now, are very much led by emotion and not necessarily by rational kind of decision making. You know, something happens, you know, like a bee stings you, you're like, son of a, you're not, that's not an emotional, that's not a rational behavior. The behavior will be, oh, am I injured? No, okay, let me fix it. But what you do, son of a bitch. So, and then the way you react to a bee and a wasp might be different. If you slap a wasp, he's going to sting you like 14 more times. A bee, he's only got one in him. That's it. Anyway, just try to understand that other people may be less rational or more rational than you. They may be less or more emotional than you. And you do have to layer that on top of your assumption of how they're going to behave, because emotion detracts from rational maximalization behavior. Okay. So knowing this, or at least thinking this, let's move on and let's go through. And so the first ones we're going to talk about, we're going to go talk about projection bias, hyperbolic discounting, fundamental attribution error, course of knowledge. No, it's not the course of knowledge. Give me a second. It's the curse of knowledge. Hello, typo. See, I type these things fast. That's what you get. We're all fallible creatures. The curse of knowledge, the Dunning-Kruger effect, framing effect, hindsight bias, the identifiable victim effect. Let's talk projection bias. So as I read through these, I want you to just go kind of look back in your recent life and say, am I doing these kinds of things, or am I witnessing this kind of behavior? And it's enough. You don't have to memorize all these and go, I'll never do these again. Well, that's nonsensical. You will do most all of these again. But if you start to notice the behavior, you can dial it down. And yeah, Matt, Bitcoin maxis, they scare us all. Okay, projection bias. We assume that people think the same way we do, even though there's rarely justification for this. The tendency to unconsciously assume that other people share our current emotional states, values, and thoughts often lead us to a related effect known as the false consensus bias, where we believe that people not only think like us, but they agree with us as well. This leads us to overestimate how typical and normal we all are, and to assume that there is a consensus that exists on matters when there may not be, right? So essentially seeing patterns that don't exist. And that kind of behavior is odd. So here's an example. A student that likes to smoke weed assumes that the majority of others also like to smoke weed, while in reality, most other people probably are not smoking weed, right? I'm sure you can find other people that are smoking weed, but it's not that the majority, it's not everybody's doing it. See, everybody's doing it. No, bro. Everybody's not doing it. There's a reason why you're like hiding out like a creep over here with a bag of Doritos. Another example is thinking that your own views will be the same over and over throughout time. And that's been proven statistically untrue. We change. We all are. We change from one day to the next. We take on new information. Hopefully we're changing our opinions as information changes. In the crypto markets, there's definitely a herd mentality, as you can see. I think Yale recently released a study that found some interesting behaviors in the cryptocurrency buying trends. They found that the best time to buy a coin is after the coin has dramatically risen in price for a full week. So because you have that follow-on effect that comes where here comes the herd. In week 2, the sheep jump on for the ride, and at the end of that, you're probably better off selling at the end of week 2. So that's a basic study that Yale did. I'm really distilling it down to the dust. But in week 1, everybody jumps on board. And by the end of week 1, the word is out there, the trainer at your local gym or your flight attendant or your waiter, now they're jumping on board, week into week 2. And that's by the end of week 2, you need to be out, hit the bricks, hit the sticks, exit. So, I'm not saying to do either one. I'm just saying this tends to be the behavior. But don't assume that because you and your friends are into crypto that everyone else is. That's flawed. Only 2%, I think still like 2% of Americans own crypto. That leaves probably 98 out of 100 people, meaning, they kind of look at you and go, you're a creep. Don't talk to me about crypto. And I would urge you, I would talk about crypto in vague terms. Don't talk about the money. If you've made currency units in crypto, don't talk about it. Do not talk about it. You're just going to inspire envy, jealousy, ire, rage, all those emotions, because no one wants to hear about how good you did, right? So if you're going to talk about crypto at all, just talk about in these kind of the vaguest, loosest terms of how decentralized assets might disintermediate the world around us. Okay. Don't assume that because you think a certain coin or token is going to take off that the majority agrees with you, because they don't. Mostly they don't. That's why there's all these really vigilant, kind of nasty communities that S-talk each other. Don't participate in irrational fits of peak insanity, also called peak retard or cryptarded, which is probably not politically correct, but I care not. Do take notice of when other people are suffering this kind of bias. Okay. And so there you go. This is projection bias. We got through number one. Overcoming projection bias. Basically, the best way to avoid this bias is to argue against your own investment decisions. Take both sides. You could write like a plus and minus column, like Bitcoin, pluses, minus, and then look at it and be honest with yourself and understand that, hey, these are some black swan things that could wreck us. Wrecked, R-E-K-T. I'm wrecked. You know, the crypto community started misspelling things a while back, and we just continue to misspell things. So that's good. That's always good. Try and imagine what things could occur in the near future regarding your tokens. Are there network effects kicking in that might add large pools of liquidity? Are there regulations kicking in that might make your coin not exist or have problems? Is the mining centralized somewhere where they could turn off the power? Are there valuable use cases being formed? Has technology passed you by? XRP, XLM. Are developers jumping ships, selling their coins, running for cover? Link. Are there new exchange listings? Delistings. So challenge your beliefs on a regular basis. It's important. Challenge your beliefs on a regular basis. Okay. Especially before you pull the trigger on any investment. Otherwise, you're gambling. Okay. Don't gamble. We don't like gambling. Okay. Let's talk number 2, hyperbolic discounting. This is the tendency for people to choose an immediate payoff, like right now, rather than a larger payoff in the future. Example, people would rather have $100 right now than $150 a month from now. And I know you might say, well, inflation. No, dude, you're not going to make on the aggregate 50% a month. Inflation's not there yet. We're not Weimar Germany, right? So, right. So this touches on several aspects of human thinking that could be flawed. The ability to delay pleasure is relatively rare, but most always present in educated and or successful investors. Pleasure delay is incredibly important. If you can delay pleasure, if you can live 2 clicks beneath your means, if you can have a fat ass bank account and not spend it, you're becoming more successful, more educated, right? And this is important. So this is a good time to mention Laszlo. Many of you may have heard of the guy who spent 10,000 Bitcoin to buy 2 pizzas. You guys remember that? Laszlo? Now they have like the Bitcoin pizza day. That's what that is. It's this guy Laszlo. Now, there were a bunch of reasons for why he did this. Obviously, he didn't have any idea that Bitcoin would ever be worth more than a few pennies. So he saw an opportunity to cash out for a couple pizzas. He also did it to kind of, it was the first, it may have been the first ever, transaction, kind of, it was a 3-party transaction. He paid somebody who then paid money, who bought the pizzas, who sent them to Laszlo. So it was like a 3-party, it was like 3-party repo. But you know what? Laszlo he got some pizza. He traded some Bitcoin for some pizza. Now, looking back, these pizzas cost him many millions, many tens of millions of dollars above. Well, right now, what would it have been? I don't even want to say it. It's gut wrenching, but it's 10,000 times 34,000. So, right? Makes you want to vomit. Well, so they cost him, several $100 million, whatever. You think, I wonder if Laszlo can eat pizza now without just vomiting. I think there was on 60 Minutes, he was on there, and Anderson Cooper, who's a dick, said, hey, do you ever think about what those hundreds of millions of dollars could have done right now for that pizza? And he said, Laszlo said, my psychologist tells me I shouldn't talk about things like that. That's good advice. Okay. So I would tell you the story of my brother, who was an early Bitcoin miner, and he had tons and tons and tons of Bitcoin. He sold a bunch of them. He kept some, but he sold a lot. And of course, he looks back and laments, oh, why did I sell? But at the time, it made sense for him to sell. We have a system here, which is a little bit, whatever, but that doesn't have to do with hyperbolic discounting. So basically, the effect of hyperbolic discounting is you think you just want the right now. You want to take the right now. And if you're an investor, you should have a little bit longer term thinking. So, this gets into where your goals are. And at some point, I know everyone's going to use I would hope, use some of these gains to make their life meaningfully better, or someone around you meaningfully better. And that's fine. I'm not telling you never exit, never take a profit, but you need to be realistic while you're in the space, how long you assume it's going to take for this space to build, and don't sell yourself short, right? Don't bend over in front of a cement mixer to pick up a nickel, right? There's a bunch of other versions of that saying, but that's what you get. Lots of people in the crypto market, after a coin falls in value, especially like early 2018, well, through most of 2018, they abandon all hope of getting Lambos and they just try to get back to even. And you'll see a lot of people, they get to even and they sell, or they'll sell a little bit below even. Then what do? Is they go out and they say that how the crypto market's garbage and it's all stupid because they didn't make any money or they gave it all back. But if you have longer term vision, you don't really care, right? You're not in it for the quick hit. So big deal. So there's a sell-off. Were you selling? I say that a lot to people. They call me, what's going on with Bitcoin? I go, were you selling today? Was Thursday, June 24th, sales day, Bitcoin sell day, get out of the market day? No, dummy. Put Blockfolio away and go back to work. Go work for the man. Go sell your hours. Go sell hours of your life, sucker. Well, that's why we're investing in these different assets, because we believe the velocity of currency creation will be higher. So don't discount that. Don't take the quick buck. Be an investor. Don't be a trader. All right. Most of us are here to make money and change our lives, if only for a little bit. We're risking all of this hard-earned or ill-gotten money and investing it into the coins because we believe there's a possibility for future gains. If you don't have the stomach for tumultuous markets, and I don't blame anybody who doesn't, but if you don't, stay the fuck out. Get out of crypto. If you're in the crypto space, you don't get to sit here and whine like a little bitch. If you're here, play the game. Strap in. Anyway, you get it. You know where I'm going with this. Cowboy up. Because if this place bothers you, if you find yourself being more stressed than less stressed, go to fixed income and fuck off. If you want to make 10, 20, 30, 100,000x, and you're going to eat some shit along that path, right? It's not easy. Very few people in life does the universe just write you a check and say, here, winning. That's not realistic. I mean, a few people, you're born into it, or some people are legitimately lucky, but not the rest of us. You're just going to have to eat it, man. But if you eat it, if you're in the crypto space and you stay the course, you can win, and you can win big. But you will have earned it. And when people are like, oh man, you got so lucky. You hear that now? People, oh, you got so lucky. You got in crypto early. Lucky. I've lived like 17 lifetimes in the last 3 years. I've eaten more volatility than one of those, war criminal, torturous doctorers. Like, no, I'm not trying to hear it. So you earned it. That's the other good thing is if you're in the crypto space and you've dealt with all this volatility and all the crazy shenanigans and you get out of this with more than you put in, you earned it. This was a psychological job. Okay. Do your research, trust your decisions, decide in advance where you'd like to exit. That will help. Hold until you return significant, relatively life-changing profit, or take your gains in other assets and put them into assets you believe have those better multiplier effects. Never sell 100% of a position, no matter how stupid it is, no matter how much you don't like it. Always keep 10% in a project, because if you believed in it at some point and it rears its ugly head and pops back up and does a 10x, you just got your whole position back. So keep in mind, there's all sorts of ways to profit. Don't rage quit. Don't be a rage quitter. Okay. Fundamental attribution error. Let's go to this one, not that one. Fundamental attribution error, aka correspondence bias. Okay. People wrongly assume that what a person does is based more on the kind of person they are rather than the social environmental forces at work on them. This leads them to make erroneous explanations for behavior. Example, you wave to somebody and they simply give you a quick unfriendly nod as they walk away. It'd be a fundamental attribution error to assume that this person is unfriendly just by nature without considering that this person could be having a really bad day, found out some bad news, or just otherwise is unhappy. Maybe they're in pain, right? And maybe they just have other things on their mind than waving to rando as rando walks by. So, yeah. Paul, what's up? So this flaw in thinking specifically, so we're talking about fundamental attribution error, or what they would call correspondence bias. This flaw in thinking has more to do with interpersonal actions and relationships than it does indirectly investing in the credit markets. That being said, it's important to realize that different people have different perspectives. We're all coming from slightly different angles. We have slightly different stories and slightly different backgrounds. So, and that goes back to the earlier statement. You should endeavor to be curious rather than judgmental. It's very hard to do. I wanted to beat up a guy yesterday that was just showed up at a parking lot and was collecting parking fees at a private parking lot. I was like, I'm going to beat this dude up. And then I was like, wait a minute, that's not rational behavior. I said, what are you doing? He's like, I'm a parking attendant. I was like, are you a real one? He just kind of shrugged. So I walked off. See, I saved a life yesterday. And I realized this dude's just trying to make some cash. And he's being pretty clever because he's probably got a pocket full of cash. I learned a lesson. What was that lesson? Well, I'm still kind of digging through it. But I think it's, sometimes opportunity presents itself in very weird ways. This guy decided to be a self-proclaimed parking guy in a public parking lot. But you know what? I bet no one's car got broken into. So there you go. Anyway, be curious, not judgmental. So for me, this comes into play when I'm looking into a team of developers and advisors or consultants on a project. I want to see if I can get an understanding of where everyone's head is at and how that team's going to work together to build the ecosystem or the community that surrounds the coin that I am potentially investing in. Okay. It sounds simple. So I like to imagine, like if I'm looking at a project, look at the top 3 or 4 people and just imagine just for a second, like, okay, if I was this guy with this project, what would I be thinking? If I was this guy, if you take a few extra minutes, it will kind of pay off big rewards. It's not directly related to correspondence bias, but I've noticed that if you have a project that's not culturally or ethnically diverse, it seems to have a greater likelihood of being a scam. I have the 2 Russian rule. If there's any more than 2 Russians on a project, I'm out. I won't invest in it. I won't own it. Nothing. If you got 2, if like out of 4 people, 2 are Russian, and that's not usually what you see, is that they're like all Russian. I'm out. I'm out. I'm not messing with it. My name's Bennett, and I ain't in it. Seymour Kittens. I like that name. So it just makes me extremely skeptical. So you want diversity. You also want diversity of opinion. You want people telling other people, oh, I'm not so sure about that, bro. You need checks and balances. And if you have 4 white guys that are the same MO as the whole, think about it. Do you want the same fat, rich, white assholes that fucked up Wall Street fucking up crypto? Because let me tell you right now, they kind of are. I'm not going to tell you the names of the companies, but look at who just raised $2.2 billion for another crypto fund. It's a venture fund. And yeah, they're kingmakers because they're peddling shit to all their friends. But it's the same assholes doing the same shit over and over. That's not how we move forward. So you need diversity. You need diversity of viewpoints. You need individuals that are going to be skeptical of each other, but like for the greater good, right? So anyway, different points of view, different life experiences. Let me know that the team is developing the project in an open, forward-thinking way, better prepare for the future, yada, yada. I like Polkadot. I like, even Ethereum at least has some diversity. I like Not as much, by the way. I like obviously Cardano, but look at all these projects. Go look on their team page, and if everybody looks the same, bail. Okay, cool. And then let's talk now. Let's shift gears and let's talk about the curse of knowledge. Curse of knowledge. When well-informed people, this happens a lot, especially with economists. They're the worst about it. The curse of knowledge. When well-informed people find it difficult to think about problems from the perspective of those less informed or different schools of thought, right? Like the Keynesians and the Austrians, like, you're stupid. No, you're stupid. You don't even know what stupid is. You don't even know what is. Anyway, so this can bleed into a scenario referred to as injury by intelligence. And you guys see this all the time. Who had this worse than anyone? Ben Bernanke. He's very intelligent. He's very eloquent. And he talks gobbledygook, but in a way where your average person can't really knowledgeably dialogue, knowledgeably argue or frame good arguments, even though he is a competent liar. And Jerome Powell may just kind of be a dummy. I don't think Jerome Powell is a clear liar. He definitely perverts the truth, but he's not as considered. Fireman Ben Bernanke can take even an above average intelligence person in the media and just spin them around. And even though you know he's lying to you, it's very difficult to frame that in as eloquent. And so what happens is people get caught up in the way he's verbose. They get caught up in the way he speaks and communicates, and they forget, oh, this guy's a fucking liar. He's been lying for like 17 years, and everything he touches is a fucking scam. They forget that. You guys know Bernanke lied to everyone for 17 fucking years. Continues to. That's why I say 17. He wasn't Fed chief for 17. He continues to lie to everyone. Still. Doesn't matter. He's really good. He's really eloquent. This is injury by intelligence, where people think they know everything and essentially put blinders on to new information. He's even worse because he uses his intelligence to spread quasi-truths, mistruths, and just straight up bold-faced lies. He does it with a kind of a Cheshire cat grin, like he's smarter than everyone. And he's smarter than most people, or at least he's more eloquent. So it kind of gets it across. Example, consider a techie computer techie. Would that be like a sexy techie? All right. Anyway, consider a computer programmer who spends his or her days, or whatever pronoun, developing complex web software, cryptocurrency projects, speaking to other programmers all day, every day. When you ask this person some advice about your project, you will likely receive an explanation that's far too complex for you or the common man or woman or pronoun to understand it. And so, you're like, I don't need this kind of complex gobbledygook. I just need like a regular answer. And then you end up more confused than you were. So the person basically knows so much more information than you in a very kind of narrow range that they answer in a way that's difficult for you to process and comprehend. So you don't really know what you're being told. Or they're perverting the answer by overwording you. Anyway, sometimes it's completely overt and in some kind of attempt to convince you just simply that they're intelligent, not even be the answer. Paulson. Yeah, Paulson was a douchebag. That's for sure. So how do you avoid this? To sidestep this curse, start with the very basics and get a feeling. This is why one of the reasons why I try to tell everyone, be able to explain the assets you own to yourself and to grandma. Because if you can explain these assets to somebody else and to yourself, then you know why you own them and you know what you own. And you don't have to use a bunch of big, stupid words, right? The genius of people like Ben Gortzel and Charles Hoskinson is they don't have to overword you. In very plain human speak and parlance, they can explain to you what's going on and you get it, because they're not there to let you know how smart they are. They're there to convey information. Then look at the other side of that. Oh, like Brad Garlinghouse. I digress. Just watch him for 13 seconds, and it kind of It all makes sense now. If you go back now and watch Brad Garlinghouse on CNBC and put on the filter that, oh, he's a criminal. He's a fucking criminal. Oh, it makes perfect sense. You get it. You're like, oh, of course that's the way he is. Of course he's like that because he's a criminal. But before you were like, well, this guy, something about this guy that rubs me the wrong way. It's the felonious activity. All right. Showering people with big words and impressive details will only confuse and frustrate them. It also kind of, it creates this kind of, this chasm where people start to distrust anybody that comes off as being intelligent, right? There's just a general distrust for the intelligent community, right? Because you're like, damn it, they know things I don't know. Urgh. So you need to put ideas in your head into a context that other people can comprehend. Don't worry about the way you say something unless it's the way you say it is trying to be more digestible to your target audience, right? But if the content isn't important and simply the means, the big words you use, you're missing the whole point. You're trying to convey information. Stick to conveying information, right? Any of you that have ever listened to Andreas Antonopoulos, you can see the opposite of this. He is a brilliant software engineer, and he's equally brilliant at explaining incredibly complex problems in very easy to understand way. I have no opinion on veracity. All right. There's a bunch of really cool videos. Watch Andreas Antonopoulos, even if you're not a big Bitcoin bug, watch Andreas Antonopoulos, watch him explain very complex subjects, and you'll get why he is so good in front of crowds. And by the way, did you know he does not plan his speeches? He just shows up and he walks out on stage and starts talking. So it's very eloquent, his presentations, and they're very captivating, and you stay very engaged, and he's just fun to listen to. Even when it's stuff you're not particularly interested in, Andreas is just really good at conveying that information in a way that's very human. Okay. And he's a very smart guy. He could overword you. He could dick move you. He chooses not to. All right. When you're presenting your ideas, don't get frustrated if your audience doesn't get it. If you're explaining Bitcoin to grandma, it's okay if she doesn't immediately understand. Instead, look for ways you can simplify your vocabulary or be more precise about your words so that the message you want to convey is what they are receiving, right? It's not enough to say it. You can't say it louder. You can't slow it down. You might have to reframe it. You might have to use a few analogies. If you're trying to convey information, it's not about you at this point. It's about the other person. It's about the recipient. Make it about them. Again, be curious, not judgmental. When people are explaining something to you that you don't understand, ask them to dumb it down for you. Did you guys hear when Emil said, he told Jeff one time, he goes, Jeff, explain to me, it was something about repo or reverse repo. He goes, explain it to me as if I was a dog. Feel free to bark your answer. Right? And it makes sense. Just dumb it down. And if you're hearing information that you don't get, and you know it's important and you need to get it, then say, hey, can you dumb it down a little bit so that I can really absorb this? It's okay. Don't stand on the sidelines. If something important passes you by and you don't get it, you're like, wait, what just happened? No, go get the information. Ask them to dumb it down for you. Lots of times in the crypto space, people will regurgitate a bunch of techno-babble bullcrap and to convince you that they're really smart or that they have a high IQ or their blockchain IQ is super high so that they can get your money. That's usually a sign of trouble for me as investors. Like if people are trying to overword, that's one of the reasons I don't trust the guys at Celsius. Because, or at least I didn't used to, because they just try to overword. They come off all fancy. They try to big dick you talking about how much money they have. And I'm like, it's not for me, bro. That kind of behavior is always a little bit suspicious to me. If you have a lot of money, you don't need to go tell people you have a lot of money. So kind of just rubs me the wrong way. Anyway, so if they can't break down their value proposition into something that I can chew on or something that I can absorb, they either don't know themselves or they haven't taken the time to clarify, or they don't know it well enough outside of their lingo, right? If they can only explain it Like if you say, what's the meaning of this word? And they just say, well, it's this word. Like, no, you can't use the word to explain the meaning of the word. What is hyperbole? Well, it's when you say a hyperbole. What? No, you can't use the word in the definition of the word. So sometimes they may not have good product knowledge, or they may not really understand the tech beyond their own kind of inner group lingo. So yeah, they might not know it. When I hear people say, I don't, I like blockchain, but not Bitcoin or whatever. I know they're idiots because I know they don't have any idea what they're saying. And a lot of traditional finance managers talk to someone at Chase. They'll say, we love blockchain, but we don't like Bitcoin. I say, okay, well, you don't know what you're talking about. You're clearly a fucking idiot. Great, cool. Next, can you give me the next idiot? Who's your boss? I'd like to talk to that idiot, because I'm just going to go up the chain of idiots till I find someone that's not an idiot. All right. Or maybe I'll get all the way to the end. It'll be Jamie Dimon in office. And I'm like, shit, we've gotten to the top of the idiot ladder. Why don't you like Bitcoin? They'll stutter, hack up some BS they heard on CNBC, hoping that you don't ask them for anything technical. And then they'll go on about how blockchain is revolutionizing the world. And that, by the way, the people at Chase told me after they lost like $5,000 in cash of mine in their ATM, which they refused to open up, which is a little bit weird. They told me, oh, we use a blockchain. I go, what do you use blockchain for? Well, we use it. Right. What do you use it for? What is a blockchain? As a matter of fact. Oh, well, we use it. Okay. Got it. Okay. So you ask them, what do you like so much about the blockchain? Oh, it's just because it's all the blocks and, information and, decentralization. Great. Got it. Okay. Just for the record, there is no blockchain phenomenon without Bitcoin, right? That's why we call it a blockchain. It's Bitcoin. There's all sorts of things that are not blockchain based, right? Like DAGs, directed acyclic graphs, IOTA, Hedera. They're not blockchains, but we use the word blockchain just to represent. Distributed ledger is probably more, that would probably be a better way to explain it. And also, if you say distributed ledger, you can break down distributed ledger in your mind. I think that's easier to chew on than blockchain. No, distributed ledger is dope. Okay, let's go through number 5. We're going to talk about, and we're going to do this over the next several days. We're Tuesday, Wednesday, Thursday. We're going to keep going. So let's just tackle number 5 today. The Dunning-Kruger effect. You've probably heard this. Anyway, let me go. The Dunning-Kruger effect. This is a situation where incompetent people fail to realize that they are incompetent because they lack the skills to distinguish between competence and incompetence. The people that are buying GameStop and AMC and Hertz and Ford and all of these stupid ass meme projects, sometimes they don't know that they don't know what they don't know. Most times. A few people know this is a trade. This is a hack job. I'm riding the trend. Cool. The people that understand that, hey, good on you. But most people don't. Most people that bought Dogecoin, they don't know what they own. They don't know there's no cap. They don't know there's so many tens of billions of tokens. They don't know that it's a copy of a copy, right? They don't know these things. They're just like Doge. Like, do you know what Doge is? Nope. Do you know how many there are? Mm-mm. Do you know what the float is? Nah. You know what the fee structure is? Couldn't tell you. Do you know who started it? Nope. Do you know who's working on it? Do you know that only 12 wallets own like 97% of it? Nah. So why do you have it? It's going straight up. It's going to the moon. Okay. Good on you. Good on you, fella. Again, don't get angry at them. They know not that they know not. So, be curious, not judgmental. So let me give you an example. Competence. Okay, let's talk about competence. So actual competence may weaken self-confidence, right? As competent individuals could falsely assume that others have equal amount of understanding of a particular subject. So what this kind of harkens back to is what we talked about injury through intelligence. This is the other side of that. So injury through intelligence could be looked at as, I'm pretty smart. I assume I'm smarter than I am. And then when I'm in the weeds, I just get really verby. I just talk a big game and I'll just work my way out of it because I'm smart. I know everything. It's like the person who's a good runner saying, oh, I'll probably be really good at triathlons. I don't need to practice. Right. But in triathlon, you're running and swimming and then you're on a bike. Like, yeah, but I got strong cardio. I'm fine. No, you're not fine. You're going to drown, dummy. Anyway, so an example, immediately after finishing a test and before the test results have been revealed, people who have actually performed very poorly are susceptible to the Dunning-Kruger effect and will often believe that they have done exceptionally well. Idiots don't know what idiots don't know. People who are kind of smart always overestimate their intelligence and are loath to admit to themselves, especially when they see gaping holes in their intellect or subject matter knowledge. So there might be this one space like in finance that you don't quite understand and you just kind of gloss over it, but it's always there. It's always lurking. And that's why, like Jerry and I talk about, take your time, go learn how the gears that turn the economy work. Even if you don't memorize everything, just get the concepts, right? You don't have to, you're not going to be doing econometric regression models and shit like that other idiots use to prove to bigger idiots that they know what's going on. It's just, right? You don't have to do that. You just want to know how the gears work. And then you won't be a victim to this. You should always underestimate your level of intellect and intelligence. Underestimate. And that way you're always playing catch up and you're always doing the research. And if you do that, then you're going to build competency even in the areas that right now might be a little bit outside your wheelhouse. Yep. Okay. So it's okay to say, man, I'm not sure. I'll have to get back to you. It's okay to punt, right? If someone asks you something, it happens all the time when I do the other show and we have the live chat. Someone's like, hey, what about this? I'm like, I don't follow that, bro. I don't know what to tell you. Punt. Someone else can get it. So it's okay to punt, but admit to it. Just say, hey, I don't know about that. No one's going to be angry at you because you don't know every detail of the crypto space, all 9,000 goddamn assets. It's okay. I only know like 40 of these things. The rest I kind of peripherally know. I may like, oh, I think it does that. I think it does that, but I don't know deep enough to own it. We need to all accept that we are human, that we have so many things in our lives to consider and ponder and study, and that it's tough to get subject matter expertise on everything. We are not all Ben Gortzel or, Charles Hoskinson or Vitalik Buterin. We aren't. We are who we are, and that's okay. Just be honest with yourself, right? We have many things to consider and ponder and study and grow, and none of us knows everything, even about subjects that we may presume to be experts on. So I'm not an expert on anything. I'm actually not an expert on anything that I can really think of, not a full expert. I mean, that seems like something if you're just very specific, your entire life, you might achieve the level of expert at some level on some very, very obscure, peculiar thing, right? But if you know a little bit about a lot of things, you're not really an expert really on anything. So like I know a lot about gold coins and precious metals. I can price out your diamonds. I can help you buy some crypto and analyze the white paper, see if I think the people are competent or not, but I'm not an expert on anything other than just asking questions. You can do that. You can be an expert on asking questions. You can become an expert on being curious, right? That's kind of cool. So yeah, become an expert on asking questions, and you'll find yourself gaining really strong subject matter understanding, enough for you to make decisions that will improve your balance sheet, right? And become an expert in learning things. This is another deal that I've forced myself to do. Alan, what's up? Become an expert in immediately Googling shit that you do not understand. If you hear a word or whatever, Google it right then. If you're ever talking to some friends, hey, I wonder about that. Don't wonder about it. Google it right then. That second. And then you don't have to wonder about it. And it's like, it's in there. So many times you hear people say, I wonder about that. What do you mean wonder about it? Bitch, we got these phones. You don't have to wonder about shit. Google it right then. Learn it, or at least wiki it, something. Go to Investopedia. If you're looking anything financial, go Google it and then look at Investopedia. That's that option. Don't. Wiki is a bunch of idiots, mostly. Go to Investopedia. It's kind of like parsed knowledge in the investment space, but it's legit. It's as legit as you're going to get. So Investopedia. Get good at pitching bad ideas without being worried that you're being thought of as stupid or foolish. And if that reminds you of something, I will leave you with this. Epictetus, he said, if you want to improve, be content to be thought foolish or stupid. Say that again. If you want to improve, be content to be thought foolish or stupid, right? So when you take a look at a crypto project or whatever that you might want to invest in, ask questions, read, listen to podcasts, watch idiot YouTubers, but remember that they're idiot YouTubers. Become an expert on asking questions, become an expert on being curious, and be content to be thought foolish or stupid. Yeah, like my poor, insolvent, drunk, strung out on meth grandmother who's high as a kite, her nose all white this morning. She's just been head down in the coke and angel dust. That's grandma.
Hey, this is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain. We here to fix that. You want the news on them new stocks? This where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, you talking to the Prophet? Hey. We talking condos and nice clothes and dropping Lambos. I remember them night codes, we couldn't stand those. We tried to drive on them house roads, but had to stay low. Now there's solutions to hard bills we couldn't pay for. I talked to Prophet to get some profit, we couldn't change the top. If it's a stock and I need a cop it, I wait for him to drop it. Ain't no option, let's get it poppin', we chillin' in the trap. I need some crypto, put it in my pocket, by any means I rock. This is the Prophet with Nick Black, it's time to chit chat. You know nothing about blockchain, we here to fix that. You want the news on them new stocks, this where you get that. So go and grab you a nice chair. It's time to sit back and talk to Prophet. Hey, you talking to the Prophet? Hey, you talking to the Prophet?
It's all fake news. It's phony stuff. It didn't happen.